Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And yes, back by popular, and I mean like popular demand, the team from Convoy. How you guys doing?
Good. How are you doing?
Good.
I'm doing that video last week where we introduced your 40-year product. Let's just say was highly viewed and we had lots of questions. So we're going to do 3 videos together today. But real quick, gentlemen, introduce yourself and then we'll get into the questions.
My name's Dustin Rosenberg, and then my partner.
Yeah, Jonathan, you.
Awesome, guys. Thank you for doing this. So guys, I collected 10 questions that I just want to go through point by point about your 40-year product. So again, question number 1 is, this is not technically 40 years of interest only. It is 10 years of interest only that then rolls to a 30-year amortized loan, hence 40 years. Is that correct? Do I understand that correctly?
That is correct.
Awesome. Next question. Does the interest rate adjust at any point? You sign the loan funds. I'm just going to pick a number, 4%. Is it 4% forever? Is there some kind of adjustment? What happens?
It's 4% forever. Well, it depends on the loan that we do, but if it's the 40-year fixed program, it'll be 40-year fixed.
So there are options then, it sounds like, Jonathan, based on that, where we could say it's a little less now, a little later, based on your response?
Correct. But right now, where the market where it is, we see the 40-year fixed being the best option.
I would agree with that,
yeah.
Yes. So again, I'm just going to use a fictional rate of 4%. I sign on the loan, it funds for $500,000. My payments, 4% times 500, divide by 12, because interest only payments are easy. Then it just turns into a 30-year amortized loan at 4%, correct?
Correct.
No adjustments. Awesome. Next question. Is it only for investors, or could this be used for owner occupants?
So the product that we were promoting, was targeted towards investors because we feel that it's more beneficial for investors, but we do have the same exact product for owner occupied properties as well. Interesting.
I didn't expect that answer. Interesting.
But they are income qualified, personal income qualified, if you do an owner.
So okay, so let me right, got it. So again, so let me peel this back, because actually I didn't expect that answer. So the normal product, the one that we talk a lot about on one rental at a time, is income based off the property, right? You evaluate the asset. Correct. If you're going to do a 40-year owner occ, i.e. it doesn't produce rent, it's going to be based on the individual income and all of that. Is that fair?
Correct.
Interesting. So again, an owner occupant today, theoretically, if they wanted, because this is not something that FHA has or anyone else, they could come to you and get a 40-year mortgage on a property if they want. Same deal, 10 years fixed, interest only, 30-year AM, it doesn't change owner occ or investor, same deal.
Correct.
Yep.
Wow. I did not expect that. This is fun. This is why I ask questions. Okay. Next, is there a prepayment period? Is it the 7, 6, 5, 4, 3, 2, 1? Is it at the 10-year mark? Is there, and again, standard products, don't talk about points, I don't know what you call it, base rate or standard or whatever. Is there a prepayment period? If so, how long?
So the standard is 3.
Okay.
There's
so 3, 2, 1?
No, 3 years. So 3-year period.
Okay.
It really just depends on the lender that we end up sending it to, because we have so many different lenders that do this.
Okay.
But most of our lenders will do 3 years as standard, a little bit of a discount on the price if you go 5 years.
Okay.
And then a lot of people have asked, like, what's the actual prepayment penalty? For a lot of our lenders, it's 6 months of interest.
Okay.
And then we have other lenders that'll do a hard 5%. It really just depends at the end of the day who we send it to, but it's it's either there's step down, which is what you're talking about, 5, 4, 3, 2, 1. There's 6 months of interest, and then there's lenders that'll do a hard 5% or 3%.
Yeah, that's awesome. And again, the reason I'm asking these questions, folks, is for you. So these are things you should be thinking about. And again, if you want to ask about your situation and your loan, that's why you got to reach out to these guys. Let's do that right now. We'll do it again at the end. Jonathan or Dustin, how do you want people to reach out? Because I'm guessing you're even going to have owner occupants reach out now.
Yeah, I think the best way is emailing us at privateclient@convoyhomeloans.com.
Perfect. We'll hit that again at the end, and I've got to put that in the notes. Let me just give myself an action item. Sorry about that. Awesome. Okay. So prepay, it is there 3 to 5 years. Talk to you. Again, ask your questions when you call the team, Dustin or Jonathan. Okay, now we're going to talk about down payment. So this is not a 3% down, 3.5% down, 5% down loan product. You really want some skin in the, or I would say not you, your lenders really want people's skin in the game. So what are we talking about in most cases?
So the owner occupied, we can get away with, depending on the loan amount,
Sure.
down payments that are, 5, 10, 15%. We're not going to get to the 3%.
Right. Okay.
But depending on the loan amount and the property type, essentially on the investment product, we could do as little as 15% down.
Okay.
If the loan amount's less than 1.5 million,
Okay.
and it's either a single family residence or a 2-unit.
Interesting. So two units and below, 15%. So what you're saying is if it was a 4-plex or bigger, which is another question, which we'll get to in a minute, you might be up to 20% down based on what you're saying.
Exactly.
Okay, that's reasonable. Man, you guys are going to get a lot of phone calls or emails, I guess. So down payment, and again, the owner occ question again, because that shocked me earlier. The reason you could get pretty low is again you're qualifying the person. They may have high income. So again, if they can pay it, you can go higher. That's the difference.
Exactly.
Correct.
How about that? All right. Next question. I'm going to say this in a way, and you can correct me if I'm wrong, but this is not the best product to start with if you are doing a heavy fixer like a Burr project that is going on. It's not the right product. The asset is not in condition where your lenders want to take that. You have other products that can help, but this 40-year fixed is not where you start. Is that fair?
Correct. Yeah.
Oh, I like this. This is fun. All right. Next question. Can I get a loan in all 50 states?
Investment properties, yes. We're
Okay.
licensed in, I think, 15 states for owner occupied, though.
There you go. See, this is why we do this. So investment loans, all 50 states. If you want to do owner occ, reach out to them on email and ask, because it'll be 15 states based on what you just said, or roughly 15 states.
Correct.
Oh, so I like this. All right. Next question. Minimum loan amount. There are lots of states out there, lots of investors, lots of fans of one rental at a time that are doing what I'll call small balance loans. I know there's lots of banks that refuse to do loans at 50K. I'm guessing, given this product, that you have a minimum loan amount of something over 50 grand, I would think.
It's right now the official minimum for all our lenders is 150.
That's okay. Yeah.
Yeah.
And again, that's the loan amount. So the asset, again, so people realize this, that's not the asset 150. That's the loan amount 150. So the asset, roughly speaking, is 200, just roughly.
Correct.
Okay. See, this is why we do this. Now, could we do, like, let's say we're in Ohio or Cleveland, where the individual rentals are maybe 75K each. Could we, in theory, buy 5 at one time and do a loan, or would that not be best for this product? We should do a different product. So could we do a blanket or portfolio loan across 5 assets?
Yeah, for the 40-year product we've been talking about, you can't do a blanket loan, but we have obviously options or programs for blanket loans.
Yeah. Yeah, I'm trying to create the line for folks so they know what to ask you. They don't assume this when you're like, you got to go left, you can't go right, you know?
Yeah.
So this, no answers are totally okay. Because that actually sets people in the right area. I did ask this last time. I expected this to be very residential, but you can actually do what I'll call commercial loans up to what I think is a pretty interesting unit count. So what's the maximum unit count?
It's 29.
Yeah, I laughed last time. That's funny.
The program changes a little bit because I've had a lot of questions from people as well on, hey, if it's a 29 years, can I still get the 40-year fixed? The program changes a little bit. It's actually, it becomes a 30-year fixed with a 5-year interest only period.
Got it. Okay.
Yeah. So it's a 25-year AM after.
Okay. So that's it. So is that the same thing for a 10 unit or 15 unit or?
Correct. It's 30-year fixed for anything up to 29, from 5 to 29.
Ah, okay. So it's not the 40-year that we've been talking about.
We do have 8 unit. We do have 5 to 8 unit at 40-year fixed as well.
Okay. So 8. So that'd be very clear, folks. 8 units and below. Again, given the loan amount that we talked about earlier, you can get the 40-year that we're talking about. But again, it's okay. it was designed for residential, meaning fourplexes and below.
Correct.
Exactly.
Perfect. Totally get it. Okay. All right. And then again, what are kind of the fees or points or what else people should realize that are going to come with this this program, just so they can start estimating what it might cost them before they call you?
So, the term points and fees obviously get kind of thrown out left and right in our industry. Points are always going to be determined by the individual or the property's, credit worthiness, if you will.
Okay.
Right? Our fees, they're going to be dependent on the lender that we have to send it to, and then the cost for us
Okay.
to fund these loans. So
Yeah. So again, appraisals, you should, I mean, I just want people to realize they're going to fund their appraisals, obviously,
correct.
or they're going to pay for their appraisals. I don't know what the right word is, fund, pay, whatever. There will be processing fees. You got to make your money. The bank's got to make their, I mean, this is not charity.
Exactly.
Correct.
Yeah. So any other questions you may have gotten from the one rental at a time family that I did not hit in this first of 3 videos that you can think of?
I think just on a little further on the prepayment penalty, because we do get a lot of questions about that from not just one rental at a time, but our clients as well. Depending on the lender we send it to, a big plus of why we sometimes say that 5-year prepay is not a bad thing is because they're allowed to pay up to, and I think we kind of touched on our first video, pay up to 20% of the principal balance on an annual basis without triggering the prepayment penalty. So as long as they're not refinancing out of it, it's almost as if there is no prepay, because not a lot of people are going to pay 20% of principal on an annual basis.
No, that'd be a big check to write.
Exactly.
Yeah. Well, again, I think this 40-year product is interesting. I was shocked by some of these answers. I like the fact that you could do owner ox. I think that's going to increase the demand. Again, based on a further question, call which state, because it sounds like 15 of the states you're good to go. Just because I want to ask, California is one of those states you're good to go?
Correct.
I would think so, but just had to ask. Guys, again, one more time, how do you want one rental at a time fans or anybody watch this video to reach out and start the process?
Email us, as I said earlier, private client@convoyhomeloans.com. And if it's easier, you can just search on Google Convoy Home Loans and it'll go to our website as well.
Yeah, what I would tell folks to do in the email, again, say you came from one rental at a time so they know what you may have heard. And then your phone number, just put your phone number in the email. Stop the back and forth on email. Give your phone number so they can call you and move the process forward. So Dustin, Jonathan, thank you for all you do. Thank you for bringing to us last week and now coming back every other week or so for the fans. So thanks, guys.
Appreciate it. Thanks, Mike.
You got it.